Good evening. Ira Epstein with your metal market update. And this update is for Wednesday, the 23rd of February, 2022, right at 6 p.m. I'm actually early today for me. I've already done the Spider ETF, and I found the glitch that I had created for myself where I couldn't get one of my advertisements to play. It's all fixed now. All right, so let's talk where we're at. Where you're at is on the verge of invasion. Everything is in place. If you will, the attacks on websites in Ukraine has begun in earnest against government websites. You now are getting the call for help from the two separatist regions that President Putin of Russia has declared countries, and they are asking for army to come in and save them. There is genocide going on, and they need to be rescued. Pretext is all there. The troops are now within 5 miles, U.S. miles, of the border. So at any point you could wake up and this is there. Putin is now hearing how the next tranche of sanctions are going to hit him. Look at his exports. So other than oil and gas, those seem to be untouchables for the moment. He can always shut off that to them. But for the moment, they're untouchable. Everything else is on the table. So wheat prices have advanced nearly $1 a bushel just in the past 3 days or so. Platinum, palladium, they're on the table. So everything, there's about 14 major commodities, including gas and oil, that Russia exports. And barring, I think, the natural gas and the crude, which is crazy, but that's how it's going to, for the moment, work out. That's where you're at. It'll cause, when we wake up in the morning, that break in the market initially. We'll all be watching the different news stations to see if there's tanks moving across, what is going on. We're getting a glimpse of that already. And it is lifting the metal markets, as you can see. They are not immune to that. They're starting to come to life on that type of thinking. For stock market traders, if it were me, I think you get out your shopping list of crazy prices that you want to own some of your stocks at, and you start looking at them, not as a trade, as an investment, which means you have a much longer window. It's not about using a chart on something like that. It is more the fundamental part of it. You have to separate the two as a trader or an investor. It's hard for many of you, but it's the way it is. Traders should not confuse their positions they put on with suddenly becoming an investment. It is the way to go broke. Investments are meant to be one thing, a bigger time horizon. Typically, if the price went crazy for you and it got there, nothing wrong with taking it off. But the chart, throw it away. It's a different type of thing. I'm looking at 1 year, 3 year, 5 year holding periods typically. So let's take a look. You can see the gold has come alive. Target is the 2000 level off the war. Yeah. People aren't saying it, I'm saying it. If everything gets in there and this thing digs away, where it's not a blitzkrieg overnight, okay? I hate using these words, but they're true. And it's just not running through the country and taking it over 1, 2, 3. It could be a drawn-out affair, and off that you can get up to crazy numbers in this market. When you look at the chart action, this is your war environment. Let's call it what it is. It'll be a war. In the gold on the swing line, you have higher lows, higher highs, trend up. Putting that in violation would be getting under 1891.10. Until that happens, you've got a classic bull pattern. You now are getting to the point where you've got the 18 over the 200, the 200 still over the 100, but they're getting close, you can see. I told you they're getting ready to move on each other and revert and get it where the 18 is over the 100, 100 over the 200. That's going to happen. Could happen. Tomorrow's Thursday. It might be too soon off this. It's hard to tell. You got to move $2 more. It could be Thursday or Friday. When you look at where the market's the very next target, 1900. Do you remember I told you that's where I thought the market was going when you cleared the 1868 level? Now it's 1931.80, the upper Bollinger Band, and wherever that comes in is my next target zone, and you're embedded. So what do I think? I think on days just like today, each day you break here, in the market as long as you don't take out the prior day's high, which you've already done tonight, unfortunately. But that's when I think the pros will come in, when you don't take out the prior day's high first. Why? Go to my website, and on the website, and if you don't know how to get to where I'm going to take you, just take your cursor and put it up at the top there. That is where you go to this section where you learn how to work on the enhanced Bollinger Band course. By the way, today I had to spend 2 hours on my outside day course, and I don't know that I'm 30% through, and I have been working on it, so it's going to be one heck of a course. And it's got so many edges in it because it helps you understand what's going on here, but in a way to put you in line if you got the enhanced Bollinger Bands, how to predict if they're going to stay there with using this. It's pretty interesting what it does. Okay, but in any case, moving up there, looking for 1931.80 down the road. Now, look at the collapse that we just got now in this market. This has all happened over the past 3 days, the gold, silver. Now, I've still got the March silver there. I'm looking at it. It's okay to have it because it doesn't go off to the end of March, and maybe that's the one I should keep temporarily. But this is how the market is going through that. And as you can see, the silver market, are we embedded? So you have to go back and see the first day where the blue line and the red are over 80, and that was here on Tuesday. So you're not embedded. Tuesday's day one, today is Wednesday, day two, and you can't count tonight because we don't know how the market will finish up. But you have the 3 days in the making to get the enhanced Bollinger Band, and here we are with the market up at the 24.82, 83 area, so you watch that. In the copper market, the trend is turned down temporarily. No surprise. I've told you over and over, I think you are caught in sideways action between that low in the Bollinger Band and that high in the band, and I think you're just whipping back and forth here. If you were to say to me, Ira, the work's bearish, do you think you'll get down there? Frankly, there's been no follow-through in this market either way. If you go short, the highs of today, Wednesday, that's got to be the stop, the objective 440.30. In the platinum, overbought, moving up. Now, platinum and palladium are on the list where you could get sanctions, be it from NATO countries, be it from the United States. You got to keep your eyes on all that is going on right now with it. But it's certainly in an uptrend, but it's never a buy when you're overbought at the upper Bollinger Band. Same in the palladium, which is now back up and over the upper Bollinger Band. I think I've called and told you on these metals what I thought was going to happen, and I think I was on the money, especially platinum, palladium. Didn't take a genius. All you had to do was look at wheat. It's exploded in price. What does Russia export? Wheat. Corn going up a little bit because Ukraine exports a lot of corn. Then you have to look, of course, and see energy markets. They're not going down in the face of all this. So these were the other two that could have gone up, and they have joined the parade. And the dollar. The dollar might get a lift here. Now, if it can clear the highs of right here, 96.25, it'll have answered the question that it wants to make a move to the upside. You'd have higher lows, higher highs. The problem I see is the Bollinger Band's right in front of the market up here. I can't get as married to the bullish side as many traders. 96.50 level is where I see some early resistance. One of the things you want to do in markets like this is get your information bright and early so that you can work with it. And how do you do that? The way you do it is in my morning subscriber videos. I start at 5:30 in the morning recording the futures one. That's Central Time. I'm going to do 40 charts. I'm going to talk the day's news. I'm going to give you an idea of what happened overnight. I'm going to tell you the major reports that are coming on in the marketplace because they'll generally come out by 9 o'clock in the morning, Central Time again, and then we start talking with what to do. And the reason it's futures first is because so many of the SPDRs ETFs are made up of that. You know that. Be it DIA, QQQ, any of those that you watch in that area versus bonds, the euro, the dollar. In the futures, I cover the markets this way, and there's something interesting. On our website, there's a slide bar. You just hit it, and it'll pull, and in bright letters, it tells you words. Hey, you're in the interest rate section. You're in the meat section, whatever it is. Each of these videos is about 18 to 20 minutes long on average. They contain very, very specific. I want you to buy here. I want you to sell there, what I want you to do. About 40 charts there. ETFs, I do it the identical way. I cover them, but I add stocks into that. So we rotate the stocks all the time. How do you find out about this and work with it? Well, it's simple. You go to our website, under the word research, it's all laid out there, right through here. You get a lot. You get I think it's 48 videos a month for this price, each one about 15, 20 minutes long. I know you hate to pay for research, but I got to tell you, good research is not free. I know you can get other things in life free. You're not going to get, in my opinion, really good research for free. That's pretty much how the world works. In any case, I'm Ira Epstein. I'll see you first thing in the morning. Take care.